Hi everyone. Once again, welcome back to my episodes. At this point, this is more of a continuation of the previous live session that we have. This is going to be very brief. I don't intend to be here for long, so I'm just going to give you a quick update on what has transpired so far, and then we see how best we can navigate our way from here. So this is volatility 75, as I told you earlier on, and currently from where we started this morning to where we've gotten to, we've come a long way since morning. So let me put a line indicating where we started from. 4 a.m. this morning time was around this area. Let me double this. Okay, so we started from here. Okay, this is 4 a.m. in the morning, and just like I told you, today we were more bullish. If you watched the live video that I posted earlier on, I told you that from today's opening, this is the algorithmic time, and this is the algorithm's true day opening, which is 4 a.m. GMT. Okay, you could see clearly that when price opened, usually we want to seek the sell side liquidities before we surge higher, but just as the 4 a.m. time opened, you could clearly tell how price didn't even wick below and surged higher, and then I continued surging higher till this time. It left some traces, and then it left some room for us to make entries. Okay, and beautifully you could see that on the chart. Let me zoom out so that I'll be able to explain further. On the chart, this particular bullish candle, you could see how this bullish candle used this bearish candle in here, and it acted as an order block, and you could see how price rejected severally when price retraced into this particular bearish candle in here. So at this point we had the order block forming. Okay, at this particular point, price actually gave us the telltale sign that this bearish candle on the 1 hour was acting as an order block, and right as and when price retraced above this high, it gave us the telltale sign. Upon retracement, you could see how price still bounced back and went up higher. Now, looking at these analysis, can we still say that, well, after price has done that and has used this as an order block, this bearish candle as an order block, can we still have some telltale sign that price is still going to surge higher? Yes. I gave you the draw on liquidity already, and it's obvious price has traded to that high, and the draw on liquidity was just on this side. This was the high in here that I was expecting price to actually gravitate towards, and beautifully price has gravitated towards that high. That was the draw on liquidity for today. And price has beautifully done that. Let's go back and look at the ultimate higher time draw on liquidity. And I have, as I've indicated, that the high in here is where we have the draw on liquidity. So you could see that the trade running, that is where I have placed the take profit level. Okay, that is where I have clearly placed the take profit level, and it will be rather more obvious to see price going down and going up there to clear the high in there, than wanting to see that price want to retrace. So clearly you could see that this highs in here, this high in here is my ultimate draw on liquidity. This is my ultimate draw on liquidity that I have targeted. All right, now back to this. Clearly, if we are going to say that we have considered that price used this particular candle in here as an order block and rallied up higher, now you could see that price is retracing into this fair value gap right in here. This is the FVG. Okay, price is retracing into this fair value gap, and what are we expecting? So now we want to expect price, as it has retraced into this fair value gap, either close on it fully, come deeper into this other fair value, other order block in here. This OB is regarded as the order block, and then we want to see price rally back up higher. Alternatively, one thing that we wouldn't be surprised to see is that at this point price can consolidate more further. If price doesn't want to rather sweep the liquidity resting inside of this fair value gap or this buy side imbalance, sell side inefficiency, price can alternatively trade further downwards, and deeper into the mean threshold of this order block in here. Now the bodies of the candle on the 1 hour time frame inside this order block will determine whether price want to continue further downwards or price want to rather continue further upwards. Okay, so inside this mean threshold of this order block, we wouldn't want to see price showing any telltale sign that it wants to continue further downwards. That is when price doesn't close on the 1 hour time frame with a body below the mean threshold of this bullish order block. This is the mean threshold. Should price trade down and closes with the body inside this area, then we know that price really wants to go further downwards and disregard this order block. But should it not do that and then rather respect the fair value gap in here, then automatically we know that price would want to reverse from here. Now the mean threshold of this fair value gap will also tell us a story. However price is going to react in the mean threshold of this fair value gap in here will also give us a telltale story of what would want to happen. Should price have a rejection and closes its body below or above the mean threshold of this fair value gap, then we know that price really want to surge further higher. Okay, so beautifully this is what is transpiring on volatility 75 at the moment. So I'm trying to say that, oh, this area we can get a trade. Yes, it's possible, but I wouldn't want to take a trade at this time of the day. Okay, at this time of the day, I wouldn't want to take a trade. I would always want to sit and take a trade at the appropriate time of the day. We are looking at the London session or the New York session. Should price retrace into an OTE or price retrace into an ultimate trade entry, then we know that we have a good kill. So Anthony is saying that all the time the trades must be taken around that same time of the day. No, just like I'm saying, at this time we can even have a nice trade setup inside of this fair value gap in here. Okay, but then I'm not really interested in that. Then how do you take if you want to really enter a trade inside this fair value gap? Well, this is what you have to do. So, assuming you want to take a trade inside of this fair value gap in here. Now, we're on the 1 hour time frame. What I would usually do is I would rather want to scale down to 5-minute time frame, and I will want to see that there is a proper shift of market structure on the 5-minute time frame inside of this fair value gap. Then I'll conclude that the market really wants to reverse higher. Okay, so this is the 1 hour time frame, and inside of the fair value gap, let me put it well so that you can see. Then I go down to my 5-minute time frame. Now inside of my 5-minute time frame, anything that happens inside of this fair value gap, okay, let me try and indicate it well with anything that happens inside of this fair value gap in here. Okay, anything that happens inside here, so beautiful 5-minute time frame. Should price retrace back into this area and I have a beautiful reversal on the 5-minute time frame, a breaking structure on the 5-minute time frame, I'd always want to wait for price to break the structure and wait for a retracement, and then I'll give it a shot. So what are you talking about? This is how I would rather want to expect market. So for instance, should price come down, let me change the color. Okay, should price come down, go up, down, I'd rather want to see price breaking this structure, retracing, and then I'll give it a curl from in here. I hope that makes sense. So when the structure is taken from here, then you know that, oh, inside this fair value gap, the structure has been taken. Then clearly you know what you are in for. So beautifully, this is what I would rather do if I'm gonna even take a trade, which I've already mentioned that I won't, so basically that is it for me and today's trading. So what are we expecting tomorrow? Let's go to the daily. What are we expecting tomorrow? So on the daily, let me try and clear the chart, okay, so that you have a more coincide view of what is on the daily. Why don't you always want to leave why don't you leave the drawings and the lines that would indicate the levels that you want to trade to and all that? No, I don't really want to do that, because when you have a lot of indicators, which you have never seen any indicator on my chart ever before, but then the horizontal vertical lines and then stuff that helps in proper ICT form of analysis is what you always see on my chart. When they are a lot on the chart, sometimes it makes your chart becomes shrouded and too clumsy, and it doesn't make trading really too exciting. All right, Anthony, but can't the price also retrace back downwards all the way this way, closing on this fair value gap, closing on this fair value gap? It is highly possible. It is what? Highly possible. It is anticipated, but that is not what I see currently. Now, I'm seeing my nearest draw on liquidity, and that is my aim and that is my target now. Apart from this high, let me indicate this other high as well. It's also the nearest draw on liquidity that price would automatically and basically run into. Go to the monthly. What are you seeing? All the highs that I've indicated are basically highs of various months. Okay, the various months highs, and these are an easy draw on liquidity that price can attack. Okay, so that is all that there is with my today's trading. Okay, so what I have to do is I'll sit patiently and wait for what's going to happen and what's going to transpire tomorrow, and then I'll decide when price opens and how to enter the market again. So with this little said, I'll take leave of you. I'll leave the chat running for a while. If there is any comment and anything that comes up that I need to draw attention to, I think I'll point it out. Okay, so I'm going to just leave the chat running just like this, and if anything is transpiring that I need to draw attention to, which I will. Okay, all right. So I'm expecting price to actually trade into this blue area, because there's a volume imbalance right in there, and price should actually close in on that volume imbalance. Although it's on the 5-minute time frame, you may see it as a very small volume imbalance, but it must. Okay, and right beneath the volume imbalance is also a fair value gap that price will definitely have to close in also after the volume trading into the volume imbalance. It has to close in on that fair value gap on the 5-minute time frame if you can clearly see what is happening. All right, excellent. So back to 1 hour time frame, you could see how, just like what I described, it has closed in fully on the fair value gap above. This is the other block we have right in here, and we are seeing how price is actually dipping deeper into this other block. Okay, so if the reaction that we want to see is when price goes into the mean threshold of the other block. Should price get there, how is it going to react? And then based on that, we'll take decision off from that side. This is a 5-minute time frame.